Welcome to Debt Circle Key Roundups. I am Vijendra.
And I am Leela.
We've got some important updates in the world of finance and debt markets. First up, Hero FinCorp is accepting bids for its 2-year bonds, a move that's closely watched by investors looking for new opportunities. Meanwhile, the 10-year bond yield has fallen, influenced by easing crude oil prices, which is good news for borrowing costs and the market sentiment overall. And in regulatory news, the National Stock Exchange has settled pending SEBI cases for nearly 1,500 crore rupees, marking a significant development in market oversight. All this and more right here on the Debt Circle podcast. Let's dive in. Hero FinCorp accepted bids totaling 3.25 billion rupees for a 2-year bond at an 8.40% coupon. The bonds carry a AA plus rating from both ICRA and CRISIL.
The full subscription shows strong investor confidence despite rising rates. AA plus rating reassures quality, making this a notable corporate debt market move.
Let's move on to our next article. The 10-year government bond yield opened lower at 6.8061% on July 31st, down from 6.8132% the day before. This drop was driven by a stronger Indian rupee and easing Brent crude oil prices.
The rupee's gain of 29 paise to 95.39 against the US dollar reflects softer dollar pressure and Reserve Bank of India interventions. This currency strength improves investor confidence ahead of the government's plan to raise 34,000 crore rupees through fresh debt issuance.
Brent crude prices eased to around $88.25 per barrel after falling 1.88% overnight. This was due to reduced supply disruption concerns following Saudi Arabia's maritime security initiative in the Red Sea.
With the Reserve Bank of India expected to keep policy rates steady, matching the US Federal Reserve stance, market conditions remain stable. This environment supports the current bond yield trends and debt auction outcomes.
Now, let's discuss another important development. The National Stock Exchange received in principle approval from the Securities and Exchange Board of India for a revised settlement of 1,491.21 crore rupees, resolving colocation and dark fiber regulatory violations. This clears a major obstacle for its upcoming initial public offering.
This settlement reflects regulatory closure after years of scrutiny, boosting market confidence in NSE's governance. It removes significant uncertainty, which is crucial for investor sentiment ahead of the exchange's public listing.
NSE had already deposited 776.47 crore rupees and will add 714.74 crore rupees to complete the settlement. This total aligns with the amounts disclosed in their IPO prospectus last month.
By settling these cases, NSE addresses concerns over preferential access allegations, improving operational transparency. This move is likely to positively influence the IPO subscription and overall market perception.
Here's another significant update. Formal retail credit in India doubled from 35% in 2017 to 74% in 2026. Credit active consumers rose from 11 to 28%, showing deeper financial integration. The credit eligible population also increased from 79 crore to 89 crore.
This surge is mainly driven by consumption loans like personal loans and credit cards, which now form over 51% of borrower portfolios, up from 34%. It reflects a shift from asset-based to lifestyle credit, expanding access to everyday consumer financing.
Geographically, growth shifted from western and southern states to northern and central regions. For example, Uttar Pradesh's credit active share rose from 8 to 11%, Madhya Pradesh from 4 to 6%, Bihar from 3 to 5%, highlighting broader financial inclusion.
Demographically, more women, younger borrowers under 35, and semi-urban and rural consumers are accessing credit. This diversification signals a more inclusive credit ecosystem, reaching a wider and more varied population across India.
Let's move on to our next article. NIF Infrastructure Finance accepted bids totaling 5.5 billion rupees for their reissued bonds with a coupon of 7.88%, maturing in August 2031. The bonds were priced at a yield of 7.936%.
The bonds carry a top credit rating of AAA from ICRA and CARE, which explains strong investor interest. This demand reflects confidence in India's infrastructure debt market and the issuer's creditworthiness.
The tenure of these bonds is 5 years, which offers investors a stable medium-term infrastructure investment with slightly higher yield than the coupon rate. Such premium pricing indicates NIEF Infrastructure Finance's strategy to attract commitments amid competitive market conditions for infrastructure bonds. Let's move on to our next article. The Indian rupee strengthened by 29 paise to open at 95.39 against the US dollar, reaching a 3-week high. This was driven by the US dollar's sharpest decline in 3 months and sustained intervention by the Reserve Bank of India.
That RBI intervention is crucial. Their aggressive dollar sales signal intent to stabilize the rupee, helping it outperform other oil sensitive Asian currencies despite ongoing crude price volatility. Speaking of crude, Brent crude remains near $90 per barrel, limiting further rupee gains due to India's high import costs and sustained dollar demand from oil importers. With a weaker US dollar from softer economic data and geopolitical tensions affecting oil prices, the rupee could hold support around 95.50 to 95.60, potentially moving towards 96.80 to 97 if risks persist.
Here's another significant update. The Reserve Bank of India has extended the deadline for banks to implement differential interest rates on bulk deposits to October 1st, allowing more time to comply with the new framework tied to the liquidity coverage ratio.
This extension helps banks adjust their systems. Markets will watch as banks must now disclose rates daily for deposits above 3 crore rupees, increasing transparency and possibly affecting deposit pricing.
The RBI also emphasized that deposits below 3 crore rupees won't use runoff rates for pricing, avoiding complexity in interest rate determination for smaller deposits.
That keeps retail deposit pricing simpler, while banks still categorize deposits independently for liquidity reporting, maintaining risk sensitivity in their funding profiles. Moving to our next story, Haryana's new MSME policy targets over 55,000 crore rupees in manufacturing investment and aims to create more than 500,000 jobs in 5 years, while doubling exports through 60 focused initiatives. This ambitious push aligns with Haryana's economic goals, boosting MSMEs via subsidies, venture funds, and export incentives, which should strengthen local industries and accelerate export growth.
Key financial incentives include capital subsidies between 15 and 30%, a 200 crore rupee venture capital fund, and export credit interest subvention at 3%, capped at 10 lakh rupees annually per exporter. These measures, combined with cluster development and streamlined approvals, will improve MSME competitiveness, encouraging technology adoption and sustainable growth in the state's manufacturing sector.